Is Wolfspeed the next big semiconductor company? Looking in Tykr, their share price went from about 40 cents up to about 252 and in just a matter of a few days. In this video, I'll talk about the latest news. We'll also walk through the ratings in Tykr, and then I'll let you know if this is a stock I plan to buy or sell. If you don't know who I am, my name is Tepper, and I'm the founder and CEO of Tykr. If you're new to investing or want to get better at investing, rest assured you're in the right place. Here at Tykr, we help people buy and sell stocks with confidence. So Wolfspeed is a semiconductor company that actually went public in 1993, believe it or not. It's like, wow, they came out around the same time as like the NVIDIAs and the AMDs of the world. But anyway, let's jump in here, take a look at the latest news. So this may be a reason why the share price is starting to take off. They just announced on July 7th that they brought in a new chief financial officer. His name is Gregor van Issum. Hopefully I pronounced that last name correctly. All right, so what has he done in the past? So I jumped over to his LinkedIn, scrolling down, let's look at his history. So worked at AMS, OS RAM, feels like a tech company. We could dive into that at a later time. NXP Semiconductors, that speaks for itself. Sounds like another semiconductor company. Look at that, 11 years experience there. That's a good sign. Philips, 4 years experience there. All right, so a lot of tech experience background and a lot of experience in the semiconductor space. So I guess that's good news. But the thing is, whenever I see announcements of like new people joining, that's not a guarantee. That's a speculation of what could happen, not a result of what did happen. And this is where a lot of Tykr investors fall, we like to look at what are the actual results. And we take a look at those ratings within Tykr because they're not looking at future guesses of where things are going. It actually looks at what have you done? But anyway, just my 2 cents there. That is a key driver on why that share price is really taken off like it is. Next up, this is a big one to pay attention to, is a Chapter 11 reorganization, Chapter 11 bankruptcy reorg. The reason they're doing this is they're going to reduce their debt by about 70% with a Chapter 11 reorg. Now, just my thoughts here. If I'm a company or in my personal life, if I want to reduce my debts, bankruptcy really isn't an option. Most people tend to, step one, reduce your expenses, maybe stop buying $10 lattes and buying stuff you don't need from Amazon. And then at the same time, increase your income. So get those expenses lowered and get the revenue increasing. Well, in the business world, it's the same thing. If you're a small business owner, you're building a business, you're probably not going to do a restructure with a Chapter 11. You're in most cases going to, all right, let's find out where we can reduce expenses and let's figure out how to drive up that revenue. So just saying that. So that's latest news that's popping out to me. And now let's jump into Tykr and take a closer look at the 7. All right, if you're curious, and I don't say this in every video and I have to remind myself to do this, but you can go to tykr.com, go to education, and then down to calculations. Our calculations are available for personal use. What does that mean? Well, you can take the math and you can go use it on your own. Again, personal use. We did recently get some patents on some of this stuff, but we do like to be transparent with how do we arrive at the ratings in Tykr. So a lot of those you can see within. Let's jump back to Tykr and take a closer look. So first off, we got another stock here that's a penny stock warning. You've seen this in other videos, any stock between $0 and $5, and that's US dollars, there's a 99% chance it will never break out past $5. The reason is large institutions. You have really two segments of investors in the market. You have retail, which are regular investors like you and I. Then you have institutional. So retail and institutional. So institutional investors move share prices up and down the most. In this case, they lose interest and confidence when share prices are that low. And we try to do a currency conversion around the world because we know, of course, one currency to the next, it's not an exact match, but we've done some homework to help other people that, let's say, you're in a country like India. We've got a lot of investors in Tykr, and there are a ton of investors in India. We want to make sure you don't get into a stock that its share price is so low it'll probably never break out to a certain point. It's just like this dead zone land you arrive at with this low share price, and institutions are like, nah, we're good. We're going to move on to something else. All right. Then you have anything that's between $5 and $10 US dollars. I phrase that as flirting with penny stock territory. That's a 90% chance the share price will never break out past 10. So what I do, and we recommend this in Tykr, try to let institutions put their money in first to drive that share price above 10. And then If the financials look good and that share price is indeed above 10, then maybe consider getting into it. So anyway, penny stock warning right off the bat with Wolfspeed. Let's keep going. Overpriced stocks in Tykr are either on sale, watch, or overpriced, green, gray, red. Only 15% of stocks make it to on sale. This is overpriced. That's where a lot of stocks fall. What that tells us is the overall financials not looking very good. You can see that 70% debt issue, and they're trying to do a reorg there with the Chapter 11 bankruptcy. All right, next up, this score. I rarely see stocks with a financial score. This is the overall financial strength of a stock I see a score here of 9. I rarely see below 20. It's hard to get above 50, but below 20 is pretty rare. So that's 9. Margin of safety, 1%. And then in the middle, gosh, a lot of people are looking at this stock right now, which it alarms me. We see these big spikes where share prices start to take off. It does not mean it's going to keep going. A 38. If you're below 59, that's pretty weak. This is 38. Let's keep going. Scrolling down, we can see 5-year returns. And of course, as we know, past performance does not guarantee future results, but we like stocks that consistently beat the market, not just 1 year, but ideally 5 years. And the number we always want to look for or memorize is 80%. S&P 500 over 5 years typically returns about 80%. This is negative 95. So we actually have 0 points so far. Let's keep going. Financials tab. All right, here's another situation. Public companies, I like to invest in profitable companies. We can see your net income, all negative. It's not a good sign. EPS, net income and EPS are very similar. It's just EPS is net income divided by outstanding shares. And look at this. This was actually looking better. You go from negative $3.22 up to negative $1.15. It's moving in the right direction. It's not profitable, but again, moving in the right direction. It's a good sign. But it's sinking back down. And I get it. Now they're looking to do a reorg. And one of the biggest things here is you're spending a lot of money probably on tech, improving the tech, but at the same time, you're probably hiring a lot of people. Like if I were in a leadership position, I'd probably be thinking about making a tough call and saying, who do we have to lay off? It's just, it's an unfortunate side of being a leader in a business. You're going to have to lay people off. And that'd be the first, instead of doing the Chapter 11, I'd be looking at, okay, hypothetical, we got 100 people in the company. How do we bring that down to 50? Cut our payroll expenses in half? Because that is usually the biggest expense. But anyway, just my perspective. Let's keep going. Last step of the 7, the earnings calendar. Look at that. We got 3 in a row where they beat, although negative numbers, but we're beating here 9%, 2%, 12%. All right. Okay. So I think we're going to get a 1 out of 7 here. Let's take a look. 1 out of 7. There we go. Yeah, so leading up to what would I do in this case? Yeah, it's a semiconductor company. It's been around for decades. It does not touch NVIDIA. Of course, in second place to them, this is my perspective, was probably AMD. I know there's a lot of players in this space, but I would probably add this to my watch list, but this is not a stock I'm going to buy or sell. All right, if you want to buy and sell stocks on your own or even see my portfolio, you can join Tykr for free. Of course, do not buy and sell stocks based solely on what you hear. Only buy and sell stocks that align with your own personal financial goals. Thanks for checking out this video. We'll see you in the next one. Bye for now.